Markets are treading cautiously as global trade diplomacy shows tentative progress, while companies and investors adjust to shifting tides in leadership and competition. From multi-billion-dollar mergers to shakeups in the pharma world, it's a day of signals, both reassuring and unsettling. My name is Eniola Lunge, and here's your zoom out for July 29, where I help you see the bigger picture. Senior U.S. and Chinese trade officials met in Stockholm and agreed in principle to seek an extension of the current 90-day tariff truce, which was originally set to expire next week. The truce has helped avoid billions in additional duties, stabilizing trade between the world's two largest economies. According to Bloomberg, President Trump is expected to be briefed later this week on the proposal before a final announcement is made. Stocks in the logistics and manufacturing sectors rallied modestly on the news. The yuan also strengthened slightly against the dollar. So what's your zoom out takeaway? The U.S.-China trade story is evolving from fire to frost. Less explosive, but still volatile. Extensions buy time, not peace. Global markets may be sighing in relief, but they're still holding their breath. The International Monetary Fund raised its 2025 global growth forecast from 3.1 to 3.4%, citing easing trade tensions, resilient service sectors, and improved capital flows to emerging markets. Officials, however, cautioned that fragile geopolitical conditions and unresolved trade disputes could still derail momentum, according to the Wall Street Journal. Investors interpreted the upgrade as a signal that a global soft landing is still possible, with optimism seen in European and Asian equities. So what's your zoom out takeaway? The global economy is proving surprisingly sturdy, but sturdiness isn't the same as safety. When trade peace is a maybe, resilience has to do most of the heavy lifting. Union Pacific has agreed to acquire Norfolk Southern for $85 billion in cash and stock, a move that will create the first ever coast-to-coast freight rail operator in the U.S., spanning over 50,000 miles and touching 43 states. If approved, the merger would rival the Canadian Pacific Kansas City Southern tie-up in scale and efficiency. The Surface Transportation Board and DOJ are expected to launch a months-long review process over antitrust and labor implications. Shares of both railroads rose, signaling investor confidence in the long-term logistics play, while trucking firms saw modest declines. So what's your zoom out takeaway? This deal signals that America's old economy, rails, freight, and steel, is gearing up for a future defined by logistics dominance and cross-border competition. Danish pharmaceutical giant Novo Nordisk shocked investors by announcing the early retirement of its CEO, Lars Frøgaard Jørgensen, and naming Mike Dutstar, current executive vice president for international operations, as successor, according to Stock Titan. Simultaneously, the company slashed its full-year guidance due to growing competition in the weight loss drug space, particularly from cheaper knockoffs of semaglutide-based treatments. The company's stock fell 10%. Rival Eli Lilly saw a 1% bump in U.S. trading. So what's your zoom out takeaway? Weight loss drugs may be $1 trillion frontier, but leadership instability and generic pressure can quickly knock giants off their feet. Market dominance is no longer guaranteed, even for pioneers. UK bank Barclays posted a 23% year-on-year rise in first-half profit, thanks largely to booming trading revenues. Volatility tied to tariffs and geopolitical tensions drove strong activity in fixed income and commodities. The bank announced a £1 billion share buyback and a half-year dividend of 3 pence per share, resulting in total capital distributions of £1.4 billion to shareholders. The bank's shares rose 6% in London trading, with spillover gains across European banking stocks. So what's your zoom out takeaway? Barclays' first half results in 2025 demonstrate the potential for financial institutions to thrive amidst market volatility and capitalize on opportunities arising from global economies and political uncertainties. In a choppy world, volatility isn't just a risk, it's a revenue stream. Now, while global tensions worry policymakers, traders are turning turmoil into opportunity. So So the bottom line is this. Today's stories prove that in global markets, diplomacy delays disaster, but it doesn't eliminate it. Whether it's a billion-dollar freight merger, a bruised pharma giant, or trading desks thriving on chaos, one thing is clear. Resilience is the new edge, but strategic clarity is still king. When the world zooms in on the noise, I zoom out so you can see the bigger picture. Which of the stories have you been following? Drop your take in the comments and subscribe if you found this useful.